So there's a company out there that we literally use at least one of their products every single day. In fact, you're using one of their products right now. And that company is Google. Well, technically Alphabet, but I just call them Google. And their ticker symbol is GOOG or GOOGL. The difference being that GL actually has voting rights while GOOG does not. But they both usually trade for around the same price, currently at around $1,000 per share. So as a long-term investor looking 5 to 10 years out or more, is Google this amazing stock that we should absolutely invest in? Or is it just an overpriced piece of junk not even worth mentioning? Or is it maybe just something in the middle? Let's find out. What's up, everybody? My name is Ale and welcome to my world of stocks. So the way we're going to do this today is we're going to take a look at the company, we'll look at their business, we'll look at their recent performance. In other words, we'll look at their most recent quarter and see how their different segments are doing. And then we'll transition to the stock, their valuation, we'll take a look at their balance sheet, and then we will finally end the video with my overall opinion on Google stock, and I'll let you know if I plan on buying any Google stock myself. But before we start, I should just let you know that I used to be invested in Google stock, but I ended up selling my position after making a lot of profit because I had an unforeseen emergency and I needed some cash. That isn't to say that I absolutely had to sell the stock. You know, I usually invest with money that I don't actually need, but it just made the situation a lot easier and I had already made a lot of profit on it. So it just seemed like the right time to sell. And I just never really ended up buying back into Google stock because there was other stocks out there that just had all of my attention. But we'll talk more about this at the end of the video and I'll let you know if I plan on jumping back into Google stock. Okay, now starting with the company and their business. Google operates in a variety of different markets, and you've probably heard of most of their products and services, but I'd argue that the majority of their business revolves around the internet. So I really think of them as an internet-based company. Now, many bears would argue that Google is not well diversified because of that, but I would argue that you don't really have to diversify too much further outside of the internet. You know, the internet is really the present and the future in so many different ways. And Google stands to be one of the top, if not the top beneficiary when it comes to the internet revolution. In fact, Google controls over 60% of the internet browser market with Google Chrome, while the next closest competitor is Apple at only 15% with their Safari browser. And when it comes to finding information and asking questions, which is a huge component of the internet, Google controls over 90% of the internet search market. Shoot, even Bing Search, which is backed by the almighty Microsoft, actually pays users with reward points just to use their search platform, yet they still only manage to control less than 3% of the market. And when looking at smartphones, which are practically always connected to the internet, loyalty rates are at all-time highs, with Apple's iOS sitting at around 88%, which is very impressive. But since 2014, Google has come from behind to beat Apple with their own Android OS that sits at over 90%, which is even more impressive. And even looking deeper at the market share of these mobile operating systems, Android takes the top spot with over 70% market share, while iOS is all the way down to under 25%. But of course, to be fair, Microsoft's Windows Phone is arguably the biggest threat with an absolutely massive 0.39% market share that continues to climb and break new records every single year. Now, when looking at social media, there is a ton of competition out there from major sites, major companies, and their sites, including Facebook, Instagram, and even Twitter. But in my opinion, Google's YouTube stands out from anything else out there because it's not just a place for entertainment and for people to connect socially, but it's also an enormous information hub that helps users gain knowledge about virtually anything. And it teaches them how to implement that knowledge in the real world, and it even does so in a very easy to understand way thanks to the visual learning style of videos. In fact, many analysts say that if you were to separate YouTube from Google, it would actually be the second largest search engine, even ahead of Microsoft's Bing and Amazon, and only behind Google search. And even YouTube is even integrated within Google search. So if you're searching something on Google, chances are pretty good that a YouTube video will also be recommended to you. So there's a lot of synergy there. Not to mention that YouTube has a massive user count, clocking in at over 1.5 billion logged in users every single month. And that's not even counting users who are not logged in. And thanks to all of these different internet-based businesses and services that Google operates, Google has been able to become the world leader in the online advertising market, essentially running a duopoly with Facebook. And when looking at the US digital ad market, Facebook controls around 19% of that market, but Google once again comes out on top, controlling almost double that amount at around 37% market share. And that's great news considering that 87% of Google's total revenue in the past 3 quarters came from online advertisements. And speaking a little further on that, digital ad spending is estimated to be as high as over $250 billion in 2018, according to Statista.com. And then if you look at this chart here from Recode, you can see that it's only going to get better for Google since internet ad spending is increasing at a very fast rate, while other mediums are either flatlining or even decreasing over time in the same time period. While search and video are among some of the highest types of internet ad spending, which Google benefits from with Google Search and Google's YouTube video. Not to mention that Google has 8 different platforms with over 1 billion users each, and those include Chrome, Android, YouTube, Google Drive, Google Play, Search, Gmail, and Maps. And all of these help collect enormous data, which makes these platforms very attractive to advertisers who can use all this data to target their ads to a specific audience. Now, you're probably starting to see a trend here of Google not only competing with some of these giant corporations like Amazon, Apple, Facebook, and even Microsoft, but actually outperforming them in many different cases, and sometimes by a pretty wide margin too. However, there is another segment where Google is not considered top dog, and that's the cloud services market. See, Google Cloud actually comes in as the 3rd largest cloud platform in the world by market share behind Amazon and Microsoft, but it still comes in ahead of Alibaba and IBM. And while we don't know how much revenue Google Cloud brought in this past quarter because Google lumps it in to its other revenue segment, that segment did see an increase in revenue of around 30% year over year, which is pretty damn high. Now, Google also does a lot of work in autonomous driving with their subsidiary in Waymo, and that started their driverless car project back in 2009. And the goal for Waymo is to introduce something that nobody has really been able to accomplish yet, and that's providing a driverless taxi through a mobile app on your phone. Now, current progress shows that they've been testing the service for about a year now, but will start rolling it out to the public this year in some small parts of certain cities. So obviously we're still a long ways away before you're choosing Waymo over something like Uber or Lyft, but I could absolutely see driverless taxis being utilized in the somewhat distant future. And as a long-term investor myself, I don't really have much of a problem waiting for that business to materialize. And I do think that in the long run, it will be a major asset to Google, especially if they can get out ahead of the competition with this innovative technology. On top of that, Google also has the most widely used navigation platform in the world with Google Maps. In fact, the Manifest.com recently ran a survey that found that around 77% of smartphone users regularly use navigation apps, and Google Maps was the top choice at around 67%, whereas the next closest competitor was Waze at only around 12%, which equates to another pretty large gap. And finally, I'll just mention gaming because you guys know me. I love to talk about the video game industry because I'm a little bit of a video gamer myself. Now, the market is actually growing by billions of dollars every single year, and there's a real fight going on right now for who will be the first big company to come out as the next Netflix of gaming. Now, don't get me wrong, I think that's going to be a very lucrative, but also a very crowded market that will see large competition from giant corporations like Microsoft, Amazon, Sony, and maybe others as well. But no matter what happens, I think the company that comes out on top will be the one that has a very large cloud server infrastructure to fuel that streaming service. And so because Microsoft already has Xbox, which utilizes Games Pass that acts like a mini version of Netflix for games, and because they also have the Microsoft Azure server infrastructure already in place that they plan to use for streaming games out to your cell phones with Project X Cloud, it is my personal opinion that Microsoft will probably be the overall leader in that market, and it's just another reason why I'm actually invested in Microsoft myself. However, I wouldn't count Amazon out. They have just as big of a cloud infrastructure with Amazon Web Services. They have their own gaming division, and they also own Twitch, which is actually the largest video game viewing platform in the world. But I also think that Google has a shot of at least competing here because, again, they have the server infrastructure with Google Cloud, and they're even streaming games out already with Project Stream, which lets you stream really high quality games like Assassin's Creed Odyssey at 1080p 60 frames per second through your Google Chrome web browser. That's pretty cool. So once again, we're seeing some synergy there between some of their different internet businesses kind of helping out each other. Here we're seeing Google Chrome actually working with Google Cloud in order to stream these really high quality games out to your, cheap laptop, or maybe you have a cheap desktop, or maybe even a little tablet like this guy. This guy has Google Chrome. I could probably run those games on here as well. So that's kind of cool. Okay, now I don't have enough time to keep talking about all the different products and services and projects that Google has down in the pipeline. So we're just going to go ahead and transition to their income statement and their most recent quarter and look at their performance. Taking a look at their EPS surprise for the past 4 quarters, they were down 4% that first quarter, but then up 7%, 24%, and 24% in the following 3 quarters, with the 2 most recent quarters being well above 20%. So that's a pretty good sign of them actually beating estimates. And speaking of that most recent quarter, revenues increased 21% year over year, net income was up a massive 37%, and EPS increased from $9.57 to $13.06, representing an increase of around 36%. And then looking at their different segments, every single segment saw an increase in revenue, with their all-important advertising revenue segment clocking in at around 20% higher revenue year over year, which is another good sign. Okay, now looking at their balance sheet, they were able to increase their cash from $10.7 billion to $13.4 billion, with $93 billion in marketable securities, helping bring their current assets to almost $130 billion and their total assets to over $220 billion. And considering that their current liabilities are only at around $31 billion and their total liabilities are still only at around $51 billion, that gives Google a very nice current ratio and asset to liability ratio of around 4-1. So with an impressive and healthy balance sheet, that means that Google can keep reinvesting in the company's future and continue their future growth. Okay, so let's start wrapping up the video now. We'll take a look at their stock, their valuation, and then I'll finish everything with my overall opinion on Google. So like we mentioned before, they currently trade for around $1,000 per share, and according to yahoofinance.com, their trailing PE is a bit high at almost 40, but their forward PE is almost cut in half at a little over 20, which I actually think is somewhat reasonable for a massive company like Google, but their PS and PB ratios are both high at over 5 and 4 respectively, but their PEG ratio, which factors in future growth, doesn't look too bad at around 1.7. So I do think their valuation is a bit expensive, but I've definitely seen much worse out there. However, it is important to note that the S&P 500 is much cheaper from this standpoint because according to Yardeni.com, that index has a much lower forward PE and PEG ratio of around 15 and 1 respectively. Still, I think the fact that Google isn't too far away from that is a good sign considering how popular the stock is and how much more dominant and the future potential that they have versus many other companies in the broader market. And even at these premium prices, Google is still trading pretty far away from their 52-week high of almost $1,300, and they're also trading lower than their 50-day and 200-day moving averages, which may represent a good entry point here. Unless, of course, you think that the market is about to crash really bad and you'd rather wait on the sidelines, in which case all bets are off, but I like to focus more on a long-term dollar cost averaging strategy, so that wouldn't really apply to me too much here. So in conclusion, I think that there's definitely some pros and cons with Google stock. On one hand, you're getting a really massive, very popular corporation in Google that pretty much has their hands in almost every single internet service out there that you can think of. And the cool thing is that they're not even afraid to venture outside of that, which you can see with Waymo and what they're doing in the autonomous driving market. But on the other hand, you are definitely going to have to pay a premium price to get all the different things that we talked about in this video. And don't forget, you're also not going to be getting a dividend because Google doesn't currently pay any dividend. That could change in the future. I don't know. I guess that would be speculation, but currently they don't pay a dividend. So you're going to have to really believe that their share price will appreciate over the long run in order for this investment to be worthwhile. Ultimately, I don't think Google's valuation is too expensive considering how dominant they are and how much potential they still have left. And because you're getting a pretty good balance sheet with Google, they'll also have the funds to make some acquisitions and keep that growth going in the future. I'm personally not buying Google stock yet. And that isn't because I don't believe in them long term, because I absolutely believe in Google long term. I think my opinion is that it would be a really good long-term investment. And I'd be hard pressed to find a lot of people who would disagree with that. But my budget is a little tight right now, and there's other stocks that I'm currently picking up. There's a lot of stocks like Disney. I really like Microsoft. There's other stocks as well that I'm kind of looking into. And on top of all of that, I'm also trying to increase my exposure to dividend growth stocks, which Google does not pay a dividend. And I'm also trying to increase my cash position. I mentioned that I'm a long-term investor who believes in dollar cost averaging, so I don't lose sleep trying to predict when the next market crash will be. But that doesn't mean that I'm not, trying to be smart about it and holding a large portion of my portfolio in cash. So even though I am always basically buying stocks, I am practically always buying stocks, I do also like to funnel in some cash into my cash portion of my portfolio. And I'm currently trying to build that up a little bit right now too. So my budget's a little tight right now, but I am still investing in stocks. I just think there's other stocks out there that kind of attract me a little bit more. Disney would be one of them. Some other dividend growth stocks are some that I have my eye on as well. But if Google was to drop in share price, they were to go down, less than 900 or things like that, and we saw any kind of significant dip or correction in the market and Google really gets hammered, I think I'd be very tempted to jump into Google. And, I don't think there's too many reasons that would stop me from investing in Google as a long-term investment. But who cares what I think, guys? I want to know what you think. Let me know in the comment section down below. Do you agree with me? Do you disagree with me? How do you feel about any of the points that I made today? Do you think Google is a great long-term investment, or are you waiting? Maybe you're waiting for it to dip in price. Maybe you think it's a little pricey right now. Maybe the fact that they don't pay a dividend is something that concerns you. I don't know. Let me know how you feel, and I would love to read your comments, and I'd love to respond to them and all that good stuff. If you enjoyed this video, please hit the like button. It really helps this channel out a lot, and really helps the channel survive and grow further. So anyway, I want to say thank you for watching, and I hope that you all have a wonderful, beautiful day and that you take care. Bye-bye.